Ladies and gentlemen, good day and welcome to the Q4 and full year FY23 earnings conference call of Rane Group. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pingle from Ernst & Young LLP. Thank you, and over to you, sir.
Thank you very much, Rico. Good afternoon, friends. Welcome to the Q4 and FY23 on call of the Rane Group. To take you through the results and answer your questions today, we have the management team from the Rane Group, Mr. L. Ganesh, Chairman and Managing Director, Rane Holdings Limited, Mr. Harish Lakshman, Vice Chairman, Rane Holdings Limited, Mr. P. A. Padmanabhan, President Finance and Group CFO, Mr. Shiva Chandrasekharan, who is Executive Vice President, Secretarial and Legal Services, and Mr. M.A.P. Sridhar Kumar, Executive Vice President, Finance and CFO of Rane Holdings Limited. Please note that we sent you the press release and the presentation link of the deck. In case any of you have not received the presentation, you could look at it at the website of the Rane Group or even the BSE site of Rane. Or in the alternative, you can also write to us and we'll be happy to send the detailed deck over to you. Before we start, I'd like to say that everything that is said in this call that reflects any outlook for the future or which can be construed as a forward-looking statement must be viewed in conjunction with the risks and uncertainties that we face. These uncertainties and risks are included but not limited to what we mentioned in the prospectus and subsequently in the annual reports, which you can find on our website. With that said, I'll hand over the call to Mr. Ganesh. Ganesh, sir, over to you.
Thank you, Diwakar. Good afternoon, ladies and gentlemen. Thank you for dialing in. I'd like to welcome you all to this teleconference. You have seen the Q4 FY23 performance highlight of the group companies posted on our website. Just a few comments on the industry. The demand environment remained favorable and automotive industry experienced growth across all the vehicle segments in this year FY23 and Q4 FY23. Passenger vehicle segment achieved a new peak volume driven by the launch of new models, continuous supply improvement and robust demand for UVs. While during the year there were some shortages of semiconductors for customers like MSIL, overall I think the volume growth was very healthy. Commercial vehicle segment continued the upcycle with the demand supported by infrastructure spending and better fleet utilization in the industry. The demand for buses bounced back with the opening of schools, colleges and work from home kind of gradually transiting to physical working. The farm tractor segment also reached a new peak volume in FY23 and Q4 saw a strong growth. This was a bit of a surprise because we didn't anticipate that. And two-wheeler again ended the year with a growth, although in the first 6 to 8 months there was some sluggishness in the entry-level segment. The global economic activity, there is some uncertainty as you all know, high inflation, tighter monetary policy by US and EU, and several challenges faced, the recent turmoil in the banking sector, the US hurting the economy. Rates seem to be elevated and remain elevated maybe for some more time before declining. And in Europe, inflation remains sticky, cost of living, cost of especially energy and fuel has gone up significantly. And there are some issues like labor shortages and some labor action in some countries like France. So these are all the concerns that we see around us. The tension between US and China has still not subsided, and that is also causing some trade concerns. The war between Russia and Ukraine, of course, is a major negative. Given these challenges, the Indian economy has fared well and continued to be one of the fastest growing major economies, despite a somewhat slower growth of 6.8% in FY23, but has shown tremendous resilience to the global activities and environment. So going forward, we think that this momentum will continue and 23-24 also we are quite positive about the Indian economy. With these few words, I'll hand it over to Harish now.
Thank you, Mr. Ganesh. Good afternoon, everyone. Happy to share that the Rane Group aggregate revenue for the last financial year came at rupees 6,864 crores. This is the highest ever our group has achieved. The positive demand environment sustained throughout Q4 and helped the group post an 18% overall growth, with 49% growth coming from our international customers. The EBITDA margin for RSL consolidated increased 272 bps, supported by higher volumes and improved operational performance. I will now provide some details around the business. During the quarter, we won for first Rane Madras. During the quarter, we won new business worth 145 crores from various domestic and international customers for clearing products. During the year, of course, as you know, the plant we had acquired Legacy Technology. I'm happy to share that the plant that we acquired has now been vacated, and we have successfully transferred and integrated that plant within our Varanasi plant. Exports grew 56% for our light metal castings India division. They are still working on operational improvement and also launching new programs for SOP in FY24. Coming to the light metal castings America, as you may have heard, we have decided to evaluate options to divest the business. We are working with an investment banker and work is going on. As and when we have a specific update, we will keep you posted. It is unfortunate that even after 6 years, we could not turn around the business, and this has significantly impacted RML's financials. However, we are confident that we can improve the financial position and reduce the debt. Coming to Rane Engine Valves, I'm happy to report the financial turnaround of REVL, driven by a strong top-line growth and improved operational performance. The capacity utilization in all the plants improved significantly in order to meet the increased demand across client segments. We are undertaking several projects with key customers on hydrogen as a fuel for IC engines. In the upcoming year, the company would be strategically focusing on enhancing sales to EV insulated segment and ramp up on new business to sustain the financial performance. Coming to Rane Brake Lining, during the quarter we had a good strong growth in the aftermarket business. The EBITDA margin, however, is impacted marginally due to unfavorable forex and increase in other expenses towards specific initiatives taken up during the quarter towards the energy and yield improvement projects. Coming to our joint venture, ZF Rane Automotive, the steering business continues to benefit from the upcycle in the commercial vehicle segment. We also won some new orders of about rupees 30 crores for the steering products. The occupant safety division is benefiting from evolving safety regulation in India and won orders worth 360 crores for occupant safety products from several domestic OE customers. The inflator and webbing plant infrastructure has also been made ready, and both plants are undergoing trials and production validation. During the quarter, the cushion plant was also expanded. Coming to our NSK joint venture, the manual steering column business benefited on account of the upcycle in the CV segment. The EPS business faced slower demand on some of the served models due to the semiconductor shortage. The adverse mix and increase in material costs impacted the profitability. As some of you may be aware, unfortunately, we had to make some additional provision during the last financial year for the warranty. However, we are very confident that there will be no further provisions in the future. We are in continuous discussions with NSK to reduce the financial burden due to this issue. We will keep you all updated as and when there is specific progress. Looking to the future, we are continuing to focus on the following. Number one, enhancing the exports. In FY23, the exports grew by 38% and we are continuing to put a lot of effort in increasing our exports, and we remain optimistic about the opportunities. Number two, we have reorganized our aftermarket business to create a group structure to facilitate synergy and drive group initiatives. This is going to help us grow the sales to aftermarket at a faster clip compared to the growth in the past few years. Number three, while more than 90% of our group sales are agnostic to whether the vehicle is an IC vehicle or an electric vehicle, we are steadily winning new business both in the domestic and export markets in pure EV. I'm also happy to share that we are looking to invest about 1,000 crores across all the businesses over the next 3 years, hoping that the market continues the positive growth trend. As we look ahead in FY24, the demand environment continues to remain favorable. The global economic scenario faces headwinds on inflation, slower growth and geopolitical situation. Though India remains relatively shielded, the spillovers of global scenario cannot be ruled out. India's GDP growth is expected to moderate to around 6% in FY24. Though our order book position across businesses remains strong, we prefer to navigate this macro environment scenario cautiously, prioritizing operational improvement and cost reduction measures to balance out any risk on growth. With these remarks, we will now open for any questions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Our first question is from the line of Viraj from Equirus PMS. Please go ahead.
Hello, sir, and congratulations for good operational performance. So my first question is obviously regarding the write-off provisioning that we have taken. The provisioning for this year, is it like close to 85 crores, right?
Sorry, which company you're talking about? NSK or Rane?
NSK.
NSK. So the warranty provision you're asking?
Yes.
I think 74 crores.
74 crores. And what does this total amount now since last 4 years, what does this amount total to?
On the warranty issue, the total is now 564.
So, sir, can you just, because see, we have gone through this iteration even last year. I mean, what is the total, like, is it safe to assume that this is only for the older cars sold before DEC 18, or are the newer cars also facing the same issue where we are seeing provisionings?
It is only the older cars.
So there is no new problem which has arrived?
No.
Okay. Sir, my second question is regarding, if I look at the operational performance of our subsidiaries and our JVs, we see significant improvement in the EBITDA margin across businesses for the full year, and especially this quarter. So if you were to look at just the aggregate group numbers, we are now at like 11% margin. With the steel and with the raw material where it is, and you being very optimistic about the growth this year, do you think these kind of margins are kind of sustainable, or will we slip off a % here and there?
I mean, the way we currently see things, we see the commodity prices also leveling at this level. So, hopefully we should be able to maintain the margin, is our view.
So you're saying Q4 margins are sustainable for FY24?
No, Q4, there's always that. What is the Q4 number?
11.1% at the group aggregate level.
Okay. Yeah. So, I mean, obviously, for us always there is the 4 quarters are not equally split. About Q1 is always lower, and then Q2, and then of course, Q4. So for the full year, yes, we believe that the margins can be maintained. But for whether Q1, I'm not sure. You understand what I'm saying? That's because the sales of Q1 will never be the same as Q4 of last year.
Right, but I'm thinking at a gross margin level, we are still very comfortable. We're not going back to 5-6% margins that we used to do 6 quarters back.
Oh, no.
Right. And sir, on 1,000 crores total capex that you mentioned, can you split it up relatively across the 5 companies? A little bit of color will be very helpful.
Obviously a lot of capex is going on in the occupant safety business. That is where the most amount of capex is going on because of the continued investments in both inflator and webbing, as well as the capacity expansion we are doing for the 6 airbag legislation and export. I don't have the exact split, but I'm guessing that will be almost 45-50% of the total. Almost 45 to 50% of the total.
Thank you. Sorry to interrupt. Mr. Viraj, may we request that you return to the question queue for follow-up questions, as there are several participants waiting for their turn. Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 questions per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our next question is from the line of Ashwin Agarwal from Akash Ganga Investments Private Limited. Please go ahead.
Good afternoon. It is sad, but we are pleased that for the Rane Madras, at least the management has decided to look at options to divest the subsidiary, because as you rightly said, in 6 years, 300 crores were almost spent. Sir, can you give any timeline or any idea which you have more than this, that by when you will be able to, whether there has been any interest, and is liquidation also an option for us?
So as we have announced yesterday, we are keeping all options open. Obviously our intent is to divest this as soon as possible. Unfortunately, I'm not able to give you a clear timeline because it involves potential buyers and etc. But I can tell you that the entire team is working to get this done as soon as possible. So I'm not able to tell anything more than that. As far as liquidation is concerned, while that is an option, we believe that there is enough interest to sell the company on an as-is basis. So let's keep it, makes it easier and faster.
So that is very good. And so can we assume that no further infusion would happen from our side in terms of money?
Well, there will be some infusion till the divestment is completed, but it will not be anything significant. It will obviously be some lawyer fees and investment banker fees and things like that.
Got it. So lastly, if you can give us an outlook of suspension, ball joints and rack and pinion. We were looking and talking to various clients, for exports, and we did get good exports and we are gaining traction. So our relationship with next year, and can we develop one more such relationship to enhance, our exports?
Yes, we are making very good progress. We have now got orders from not only next year, but 2 more global steering suppliers. They have got orders during the last 6 months. So there is significant progress being made.
And which are these companies and what could be the order size?
Both Bosch as well as ZF are the customers. I don't remember the exact size of the orders, but it is part of that 145 crores that I had mentioned in my opening comments.
Okay, so these are for both rack and pinion as well as suspension?
And no, they're ball joints. They're all ball joints.
Okay. And these are for the market?
One was US, no? ZF was Europe. I forget what Bosch. I think both are Europe.
So lastly, in Rane Madras, can we grow at the rate of 18 to 20% on a standalone basis?
See, obviously, with 70% of the sales of Rane Madras coming from the domestic market, a lot of the fortunes are linked to that. While exports, we had a fantastic year last year, and the outlook also remains very optimistic. it all depends on how the domestic market grows.
Thank you. Mr. Ashwin Agarwal, may we request you to rejoin the question queue for follow-up questions. Thank you. Our next question is from the line of Pratik Kothari from Unique Portfolio Managers. Please go ahead.
Hi, good afternoon and thank you. First of all, congratulations to the team and the board for finally deciding. I mean, it's hard, but I believe it's necessary. So my first question is on the debt. On the Rane, we have about 500 crores on the standalone balance sheet, 650 crores on the consolidated. And you did allude to in your opening remarks. So just over the next 2-3 years, what kind of debt reduction that you would be looking at, other than obviously the cash that you generate from the business? Any equity raise, any non-core asset sale?
No, none of those. I'm not able to answer your first question with a clear number. The debt reduction will happen as a continuous process. Some debt will get done in 3 months, some 6, some even 15 months. But there is no initiative to do any of the other two things that you mentioned.
Okay, but what would be the debt equity or debt EBITDA number that we usually would be comfortable with? I mean, maybe 3-5 years out, but.
No, so clearly we internally track debt to capital employed, and ideally we would like to be at about 50%. But right now we are in the 65% range. So the intent is to get back to those levels.
Okay, fair enough. So my second question is, anecdotally, we do hear about a lot of multinational and domestic auto component players talking about increasing thrust on Indian manufacturing or sourcing from here due to various reasons, and especially large, capable, reliable suppliers are benefiting out of it. And I believe Rane is one of those. So how are we positioned there, and internally what are we doing to capture these opportunities which are all ongoing?
So clearly this is a very important initiative for us. Even my opening speech had mentioned that continues to be a focus area. And we have expanded our offices and resources both in North America and in Europe. So we have sales people continuously knocking on doors to some of the large OEMs as well as large tier ones, both in North America and in Europe. And of course, there is a lot of engagement going on with what we call IPO, International Purchasing Offices here. So there is a lot of work and reviews that take place, and we remain optimistic.
Fair enough. And so my last question is on gross margins. I mean, 4-5 years back we used to be at 45% or we are at 35 now. Some part of it would be because of casting, which is the domestic casting, which is also a lower gross margin business. But assuming the raw material stabilizes, where should this number settle at?
We don't track gross margins, so I'm not able to respond. As I've always maintained, for Rane Madras at a consolidated level, we always aspire to, be upwards of 10%, no matter what the conditions is. And if we can cross 12%, we believe that we're running that company very efficiently.
Thank you. We move to the next question. Our next question is from the line of Chetan Binduria from AlphaStreet. Please go ahead.
Hi, sir. Good afternoon. Sir, with respect to the Rane Madras subsidiary divestment, wanted to understand the 200 crores of extraordinary loss that we have taken. So, is this considering that the value that we are expecting to realize, or is this like the complete investment that has been written off, and later on whatever is realized will be taken as gain?
So this is an impairment, provision that we make as per accounting standards. The value of the investments carried in the balance sheet at the end of every year is valued, and if there is a gap between the carrying value and the actual value, it has to be impaired. So the 200 odd crores that you see is an impairment. So depending on what we do next year and what offer we get, etc., that will be squared off against the investment that are there in the books in the opening of FY23.
Okay, got it, sir. And so this 145 crore rupees of orders that we have received, this will get added to like this set to commence from next year itself?
No. Some will be in 24, some in 25. So it will be over the next 2 to 3 years.
Okay, got it. And just lastly, there has been a very sharp increase in standalone Rane Madras depreciation. So what is the reason for this? Where have we added capacity, and what kind of revenue ramp up are you expecting?
Depreciation. One second, I'm not able to connect to the numbers you said. You're talking of depreciation in FY22-23 over the previous year, is it?
I'm talking of Q4 23 crores depreciation in Rane Madras standalone.
Correct.
So there has been a sharp increase over last 2 quarters. So wanted to understand what is this led.
Yeah. So it is probably a combination of multiple capex investments that were made, including the Yadaki plant, which was moved into the existing Varanasi plant. There was an additional building that was added that went into production in Q4. So it's probably some of that and other capexes that we were investing during the year.
Okay, got it, sir. Thank you.
Thank you.
Yeah.
Our next question is from the line of Aditya Makaria from HDFC Securities. Please go ahead.
Yes, sir. Hi. Wanted to know what is our market share of NSK with Maruti, and how has that fared over the last 3 years?
So if you look at the ETS business, which is almost more than 95% of Maruti's production, we will have about 50% of that.
Okay. And the second thing, sir, you mentioned about the occupant safety norm for 6 airbags, but I believe that is getting pushed beyond October. So just wanted your thoughts on that. There were some recent notifications by SIAM or the government body, and there was no mention of this coming in October.
No, as of now, we are all, till the last minute, we will never know, depending on what lobbying is going on. But as of now, we are all working towards October. I mean, even if it gets pushed, it might be a couple of months. But although I'm not aware, we are all working towards October.
Okay. And the other thing, sir, you had mentioned in your earlier call that you're going to simplify your group structure. You're taking positive steps towards that, and you will announce it. So I'm just wondering, are you looking at some sort of reorganization of your holdings, or just any thoughts that you can share around this?
I've always maintained we keep internally reviewing this. So no decision has been made or anything. So the appropriate time we will come back.
Okay, got it. Thanks. Those are my questions.
Thank you. Our next question is from the line of Abhishek Getam from Alpha Invesco. Please go ahead.
Yes, sir. Am I audible?
Yes, please.
Hello. Yeah. So first question was on NSK. We've seen a sharp depletion in EBITDA margin this time. So usually we are around 10%, 9%, right, sir? So what led to that in this Q4, and what would be the further trajectory for NSK business?
Yeah. So, there are concerns in that business. While, of course, the order book per se is for the next 3-4 years is solid. But, of course, over and above the warranty issue that impacted us, even at an operational level, there are some concerns with sustaining the profitability that was there in the past. And this is largely due to, competition in the market and the prices for some of the new businesses. So we are struggling to maintain the margins that we enjoyed in the past. So while the teams are working very hard towards improving the margins, I see some challenges from the next few years standpoint. Repeating the same kind of margins we used to see in the past.
Okay, so we might be around 6 to 10% range for some time.
Yeah, I don't know the exact number, but yeah, it will be lower.
Okay. So we've almost incurred now around 600 crores provisioning. So how much is utilized after that?
Oh, okay. Out of 564, I think about 490 has been utilized.
Okay.
Yeah. So, clearly you can also see that it is coming down. So that is one positive thing I also want to share with everyone. The amount of debits we get every month, there has been a gradual reduction.
Okay. So another thing is, for last 3 years, we've seen the provisioning comes in usually Q4. So is there a certain pattern in that, or how is it working at them usually?
No, actually, just to be frank, a lot of it is to do with the auditors and the management discussions that happen in Q4 during finalization.
Okay. So another next question was on LMCA. So we've taken a write down on investment value, but from RML balance we also have a guarantee to HM and RBL, right? So almost 132 crores.
Correct.
So how will be that factored in case of a divestment?
Yeah, so it's very clear. So, given Rane Group's background, obviously we will honor all our commitments to all the stakeholders, including our bankers. So, depending on how the transaction fructifies, and if the transaction doesn't cover all the bankers' requirements, Rane Madras will honor it.
Thank you. We move to our next question. Our next question is from the line of Rajakumar Vaidyanathan, individual investor. Please go ahead.
Yeah. Good afternoon, gentlemen. Can you hear me?
Yes.
Yeah. First of all, congratulations for turning around Rane engine valves. So I think it's been a kind of a common issue for many years. So I hope the same Midas touch you can do for NSK, Rane NSK as well. So I have 2 questions. So the first one is on the Rane NSK. I see that they have incurred 114 crores post-tax loss. Even if I back the warranty, the operating loss still is about 60 crores. So despite having a positive EBITDA, what is driving the loss? If you can give some color.
1 second.
The warranty alone. So what is it?
I'm just trying to get some clarification. So mainly because of there was a deferred tax write-off that was done, that was there in the book. Again, the root cause is because of this warranty issue.
Okay. So there is it possible to give the PBT numbers for Q4 for NSK?
PBT was without the warranty expense was minus 2 crores.
Okay. So still it's okay. Still it's worse than what it was in the past, right?
Sorry, can you repeat the question?
No. My question is, even if you backward the warranty, still the performance has deteriorated. So I just wondering, is it something one-off? Do you expect things to turn around? Or the warranty issue will go off, but the operational issues will continue?
It's the operational issue, as I said, while of course the loss, there has been a challenge in Q4 for some other operational reasons, but generally, as I said, the margin, we are struggling to getting back to the old margin levels. Lot of it is to do with the pricing for some of the new programs. And also since with the prices are settled, there's also some cost inflation. So while some we are working with the customer to recover, the inherent profitability of some of the new businesses is lower. So that is a challenge that we will have to overcome, but that will take, a little longer time, or maybe a year or 2.
The second question is for the debt reduction in Rane Madras. Are we looking at selling off any of the excess real estate buildings, given that the markets have turned around on the real estate side?
No, not at this point in time.
Okay. And how about any future funding for NSK, given that the net debt is almost eroded there?
Yeah, so we are still addressing, we're looking at various options. So I don't have a clear answer at this point in time.
Thank you. We move to the next question. Our next question is from the line of Manish Goyal from ThinkWise Wealth Managers. Please go ahead.
Thank you so much, sir. First of all, thank you so much for taking the hard decision on Rane Madras. And on Rane NSK, sir, just in your opening remarks, you had mentioned that the provision what we have taken is probably the last one, and not much provision will be required. And we are in discussion with Rane NSK. So maybe if you can just clarify this more, because probably last year also we heard similar comments.
Yeah. Yes, Manish. I mean, unfortunately, yes, I know that I pretty much repeated what I said last year. This has been a very slow and painful process. As I said, which also I've repeated in the previous call, the issue has been so complex because there are, almost 5 entities involved. One is Maruti Suzuki India, then there is SMC, Suzuki Motor Corporation Japan, then there is NSK Japan, and then there is Rane NSK, and then there is Rane Holdings. So and the nature of the problem has also been complex. So when we try and identify the root cause and then try and establish which of these entities is, you can ascribe this root cause, it's getting very complex. But no matter what, Rane Holdings is putting best of efforts to arrive at that solution, and that's taking a long time, including, to be frank with you, our ability to visit Japan also was not possible till last June, July. Only after that, Japan has opened up. So some meetings have happened, some conversations are going on. So I don't have anything concrete now, but one thing is for sure, we believe that, this 564 will be crystallized. It won't go beyond this. And then how to, address this, we are working.
Okay, fair point. And sir, also in one of our growth drivers, you have mentioned that we'll focus on new technology and product introduction. So maybe if you can give us some perspective into like which company will probably what kind of products we are looking for, and also like you also mentioned about EV, if we're getting EV business. So if you can, because of late we see that many companies are getting large long-term contracts in EV businesses. So for us, how is it shaping up, and maybe on new technology and products, if you can highlight. And also, I'll add on one more thing before the operator disconnects me. In fact, I would appreciate that if you can provide full year numbers for ZF, Rane and Rane NSK, because now we don't get quarterly presentations and it's half yearly. So, and again, this year, this presentation has only quarterly numbers. So we don't get full year numbers for both the JVs. So would appreciate if you can help.
Yeah, I'll answer this first. ZF, what is the full year number? 1 minute. Full year sales. So the ZF full year numbers for FY23 was 1,857 crores, and out of which the occupant. Just hold on 1 second. The occupant safety was 937 crores, and and OSB. You speak loud. OSD, sorry, the occupant safety is 937 crores and the steering is 848 crores. So that is the total revenue. And Manish, we have noted your point about this, quarterly information not being available. We'll review this internally, what we can do about it.
Sure. And maybe on my first question, sir, on the new products and technologies. Hello.
1 second, Manish. Yeah.
Sure.
No, so new, as far as your new products are concerned, I mean, we are essentially talking about whatever we have announced is things like doing inflator as an additional new product in ZF Rane, and then some of the hydraulics products we started in Rane Madras, etc. Over and above that, any new products, we have not decided on anything. So as and when we decide, we will announce those. As far as EV is concerned, yes, in fact, we are not articulating clearly what is the order book, but there is a significant amount of EV business that we are winning, especially in North American market. In fact, a lot of the Rane Madras as well as the die casting business, new orders that we have won, most of them are for EV customers. The end vehicle, whether it's a Ford vehicle or a GM or a Tesla, all of them are all EV vehicles. So there is a significant traction there. But going forward, maybe in the future, we will then start splitting this out so that you can see EV and non-EV. But as you know, for us, all our Rane Madras and ZF and brake lining, other than Rane engine valve, everything is vehicle agnostic.
Okay. Fair point, sir. Thank you so much. We'll connect again. Thank you.
Yeah.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Pankaj Prasool from HNI Investor. Please go ahead.
Good afternoon, sir.
Good afternoon.
My first question is, why not Rane NSK provisioning we are making on the quarterly basis? It will always be better than you are giving in the annual, just like a atomic bomb. So this much provision we had made. So is it possible for you to, whatever the provisioning you are making, can you do it on the quarterly basis?
Yeah, but going forward, we will not, have anything. We take your point, but as I said, this is a discussion between, again, auditors in Japan, auditors in India, etc., based on performance during the year. But as I articulated, we believe that, there will be no further provision.
Okay. So, and my second question is, the technology partner is NSK, right? So this is a kind of a fault in the design. And why they are not taking the full hit, because the warranty is from NSK. If there is a problem with the design, then the ownership lies with the whoever made the design. No? Why Rane NSK is making all the provision?
Yeah. So as I mentioned in the past, it is a complex issue. I have never publicly said it is a design issue. And there are multiple factors. Maybe design is one contribution. Maybe manufacturing is another contributing. It is a combination of factors. So as I've said many times in the past, we are trying to break it down as to how much is due to design, how much is due to manufacturing. Because if it is manufacturing, Rane NSK is only responsible. So it has been a complex exercise that we are continuing to work on.
Okay. Next, my question is on the Rane Madras. So we had already taken an impairment of almost 223 crore in the Rane Madras light casting USA, right?
Yes.
And so, what is the likelihood consideration for their sale? Will it be negligible or what?
We don't know as yet. So as and when we have an update, we'll keep the shareholders informed.
And our acquisition cost was, I think, $8 million or something like that?
No, actually, the stock purchase was $1, and if I recollect, we had assumed the liabilities for about $8 million.
Okay. So total almost 273 crore we have spent on that light metal casting. It is a very wrong decision, I will say. And we could have taken this hit last year only, because everybody has suggested you So let us get out of this. But I don't know why we went to America and do all those things.
Yeah, I mean,
it is very painful for the shareholder. It is very painful for the shareholder to look like this, NSK, then metal casting.
Of course, as a majority shareholder, it is the most painful for us.
Including you. You are the biggest shareholder. You must be also feeling the heat. I am not denying that you are not feeling the heat. But please let us take some informed decision, and accordingly we should work. And please get something from NSK Japan, because there is something in technology and design problem must be there. So let us reward us, and we are long-term investor, and we will remain invested in the company. We have trust in you.
Thank you.
Thank you.
Thank you. Our next question is from the line of K. Mohan, individual investor. Please go ahead.
Good afternoon, sir. Can you hear me?
Yes, please.
Yeah, good afternoon. I have been a long-term investor and a long-term player in the automotive market. To me, what is surprising is that 564 crores represents, even if you take 20,000 rupees per car, we are talking of more than 300,000 cars which have had a problem with the warranty. Am I figure somewhere close to a mark, or is it 500,000, 250,000? Any idea how much we are spending per car for replacement? Is it 30,000, 20,000?
Yeah, just hold on 1 second. Yeah. Yeah, so you're right. It's in approximately in the 300,000 vehicle range. And as I shared in the past, as a percentage of the sales, it's almost close to, for certain models, certain models of Maruti, it is going as high as 10-11% of the total production.
Yeah, so this all happened hopefully all this happened within 6 months, maybe a year. So we are talking of really roughly 6 months of Maruti sales which is impacted by this. It's a huge number.
2 years.
Yeah.
2 years of Maruti production.
2 years. 2 years of Maruti production. So 2 years of Maruti production, probably you're right, 15-20% of Maruti's production before the problem has come to light, and then before we have taken corrective action. What is worrying me, 2 things. One is that we are a demon company, and therefore when we put out a product in the market, we do extensive trials and we do extensive road tests, etc., and say, okay, there is no problem, we put it in the market. Now, it has happened in the past, 500,000 cars, maybe 300,000 cars have been affected. But with a company with a turnover of 7,000, 8,000 crores, all of the automotive, my worry is that if it passes through the chinks of a demon company, what is the guarantee that something similar will not happen in any other company? I mean, I'm sure nobody can give a guarantee, but unless the root cause has been found out and in time, this is a very serious, very threatening issue for a shareholder to realize that such a thing can bring about a collapse of the company. And I don't know whether we have discussed this with NSK and what is their reaction to this. It's a large number. It's not palatable. Anyway, this is my reaction, and as a shareholder, I'm very, very grieved and pained. Thank you.
Yeah, no, totally agree with you. I mean, it's been very, very painful for us as well. This kind of a number, this was such a high-performing company, and as you have observed and a few others observed, the net worth has been almost completely eroded. Unfortunately, all the debits can only legally happen to this entity. Now, how this gets distributed, as I said, is complex. We're still working with our partner NSK.
Can it happen again?
So that's a good question. So, I mean, obviously, a lot of work goes on in product development and validation. And I think you're from the industry, you know how robust the automotive systems are. but I think once every 10 years something like this slips through the system, and this has been a huge learning for us. So I think many improvement initiatives have been identified, both in the NPD process, design process, as well as manufacturing process, to ensure these things don't happen. So it's been a huge learning, very expensive learning.
Yeah, but still it worries me to say that after 5 years you're still saying you're trying to find out the root cause where it happened in design or manufacturing. If that has not been found, like you say, we have not done that, then if it is a design problem, you can do nothing about it. It is NSK to take the call. If it is a manufacturing problem, then it needs to be addressed at the manufacturing level, at the grassroots level, or at the shop floor level. So therefore, your statement saying that we are still investigating who is responsible how much, that is a worrying statement.
Okay. No, let me clarify, Simon. So first, the root cause has been addressed, and there were multiple causes for it, and the causes were a combination of design and manufacturing. So now that the causes have been identified, we are trying to attribute, we're trying to transfer this financial number into which cause and what the mathematics work out to. I think that is where the complexity is. But I can tell you that the issue has been addressed.
Okay. No, I have very high respect for the Rane management, and I've known the management for close to 50 years. And I know that they're very large companies. I work with very large companies, and very large companies of equally good repute. There have been warranty issues, but not to this extent. To the extent of 50 crores, 100 crores. But in India, I'm talking Indian companies. I'm not talking of General Motors and people like that. But this is something which is very large, and it's a very, very sad thing that happened to you. So I have very high respect for your professionalism and for your manufacturing standards. You're a denim company for 5 years now, 7 years, I don't know how long. So anyway, I will conclude with my anguish and hope that, like last year, I made a comment saying that I hope there would be some plowback, there will be some right back of the provisions made. Obviously, I was very optimistic. But this year, you are saying that there will be no further provisions. I hope that is the final nail in the coffin of this warranty issue. Thank you.
Thank you.
Thank you. Our next question is from the line of Omkar Deshpande from Axis Finance. Please go ahead.
Hello, can you hear me?
Yes, sir. Please go ahead.
Yeah, I just wanted to ask two things. One is that when we are saying that we are going for an capex of 1,000 crores, any idea of what the split of equity to debt would be?
No, it's very difficult to answer that question because the capexes get spent at the individual entity, and some entities, some companies have zero debt, so there is, just through internal accrual. Some there is debt, so it will be a combination. It's difficult to give a single answer. I don't have the numbers because it is at the entity level.
Okay. And my second thing was there has also been an impairment of investments in R4TE. So would that continue in further years also, or like this was one of the last cases for that impairment, because this has been going on for 2-3 years now?
Yeah. So, I mean, as of now, this is the impairment value that was arrived at. I think the carrying cost now is only about 9 crores in the Rane Holdings book. So we are still reviewing the business, and we will take a decision during the course of this year.
Okay. Thank you. That's all from my side.
Thank you.
Thank you. Our next question is from the line of Rajakumar Vaidyanathan, individual investor. Please go ahead.
Yeah, so thanks for the follow-up. Just one question, sir. On the Rane Metro standalone, just want to know with the sale of this US subsidiary, will the standalone numbers, whatever you reported, that will kind of remain steady state, or will there be any cost that will come from the US? Because I think in one of the previous calls you mentioned that you are leveraging the US entity for and sales-related work.
I'm not clear on your question. Are you asking the impact it will have on the standalone post the transaction? Is that what you're asking?
No. I'm asking, are there any costs that will flow from US to Rane Madras standalone? Because now the subsidiary will be sold out. Because you would need some people to stay in US to support the Rane Madras operations, right?
I'm not able to understand your question. No, if you're where they will
because they are. I think in one of the previous calls you mentioned that you are getting the sales leads, everything, for the domestic operations of Rane Madras through the US subsidiary in the past.
Yeah, that is separate. That is for the rest of the Indian businesses. Those sales people who are sitting in US and Europe, they work to grow the Indian business, not US casting business.
So those costs are sitting in Rane Madras standalone numbers, or it is sitting in the US subsidiary?
Those costs are actually shared. It is actually sitting in Rane Holdings, but not equally, it is proportionately shared by Rane Madras, Rane Engine Valve, Rane Brake Lining.
Sir, actually my question is just whatever the standalone numbers, that steady state, we can use that. That will be the kind of number to go forward, right? There will not be any further dilution in the numbers.
Yeah. Other than the impact of this US investment, obviously you can see that the impact 220 crores that hit the standalone. So similarly, there could be some numbers like that, but the operating margin, there's no change.
Thank you. We move to the next question. Our next question is from the line of Viraj Mehta from Equirus PMS. Please go ahead.
Sir, just last couple of questions. Sir, on the 500 crore capex that you said for the safety division in ZF, what's the kind of revenue you think you can do?
Sorry, can you repeat?
For the inflator capex, you talked about 500 crore capex over 3 years. Once that is done, what is the max revenue you can do from that capacity?
So, the inflator, it's very difficult to link it to revenue because inflator actually is a localization under PLI scheme. So, there's not necessarily the top line will grow as a result of inflator, but the margin will improve. But having said that, the occupant safety business is going to have a very healthy growth rate because of the continued export growth for airbags as well as the legislation coming in India. It will be a double-digit, 13-14% kind of year-on-year growth.
Okay. And sir, for the 500 crore capex and for the 1,000 crore capex, is there an IRR number or an ROC number that we work with? Because when we put up such a large number of capex?
Yeah. So the IRR, definitely we look at it for each investment we make. Our investments are generally linked to a particular business, project, a particular vehicle platform, etc. And depends on the customer, whether it's an export business, domestic business. So various criteria are used. But yeah, obviously we look for a very healthy IRR return, and overall, we try to achieve at least a 20% return on capital employed in all our businesses.
Right. And sir, just last one thing on dividend. At an RHL level, as an RHL investor, is there a dividend? Obviously, we did not give dividend 2 years back. Last year we gave $12. This year we announced 17. Is there a policy that we follow that how much dividend we get from the subsidiaries and from the JVs? Or what's the mind or thought process you have as far as distribution of capital is concerned?
So, obviously we can't prefix numbers because it depends on how the business is performing.
Yeah, as in percentage or something, or it depends on capex, etc.
Correct. So, if it is an ideal world in Rane Holdings, if we can declare 50% dividends, we would like to do that every year. But it again depends on the business conditions. The payout. 50% is the payout.
50% payout of the consolidated profits.
Of Rane Holdings.
Yeah, Rane Holdings consolidated.
Standalone.
standalone profits.
Yes.
Thank you. We move to the next question. Our next question is from the line of VP Rajesh from Banyan Capital Advisors. Please go ahead.
Thanks for the opportunity. I'm new to the company, so I was just trying to understand that as far as the provisioning for the NSK warranty is concerned, that is about 500 crore plus, and then we have sort of taken a write-off for 300 crores for the die-cast business in the US. Is that correct? So total of 800.
Yeah. Over the last many years. The NSK 560 crores is over the last 4 years.
Right. And my second question was that regarding the structure of the group here, is there any thought that now these sorts of external issues, etc., are getting resolved, would you simplify this, various entities you have, and rather than having multiple entities, consolidate everything into one at some point in time?
Yeah, as I said even earlier today in the call, we keep reviewing this and revisiting the subject. As and when we have an update, we'll keep you posted.
Okay, all right. Thank you.
Thank you. That was the last question of our question and answer session. I would now like to hand the conference over to the management for closing comments.
Thank you very much, ladies and gentlemen, and we hope we'll be able to answer all your questions and some clarity on the warranty to the best of our ability, but we're really hoping that this will be the end of it and we don't have to address this in the future, and we are looking forward to a good year in 2024. Thank you.
Thank you. On behalf of Rane Group, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.